So let's start with our real world example here. So Sarah is a physical therapist in Florida. She operates her business from home, but also travels to patients' homes. So right off the bat, we're in Florida. Florida does not have a state income tax, so we're just covering the IRS or federal income tax, which is applicable to everybody in all 50 states. A similar process applies if you are in one of the states with a state income tax. You're just going to have to look up the specific numbers, the specific tax brackets for your specific state. She made $12,000 in revenue from April 1st to May 31st, right? So we're in Q2. So this estimated tax payment is going to be due on June 15th. And remember that April 1st to May 31st, that's only 2 months. That's not 3 months. So keep that in mind for a bit later. She also had the following expenditures during the same time period. And she also has 2 children. So the first step, determining net income. So this is pretty easy. You've probably done this before. It's simply revenue minus expenses, and that gets you your net income. Remember, you pay taxes to the IRS based off of net income, not revenue, right? So if you're paying based off of revenue, you're actually overpaying. You need to consider your expenditures as well, and then pay based off of your bottom line, that net income or profit number. So the first 2 are easy. Insurance plus website gets us $650. The second thing is rent and utilities. Now you might be thinking, isn't that her apartment? That's her personal home. Why is that a business expense? Because home office deduction, right? So we can actually add the rent and utilities and take $3,500 and then take 10%, which is our business percentage. So say her apartment is 1,000 square feet, and that's excluding, say it depends on the method you use. The IRS says you can use any reasonable method. In my experience, that means excluding things like hallways and bathrooms. A lot of people don't do that, and they end up not getting as big of a home office deduction as you can, right? So say she uses 100 square feet out of 1,000 total square feet, again, subtracting hallways, bathrooms, utility closets, that sort of thing. So that gets us 10%. And so 10% of 3,500 is $350. And the last thing is mileage. So 1,429 miles, we have the IRS rate of 70 cents, and look at that, it comes out to a nice even $1,000. For both the home office and the mileage, if you want more information on how to maximize that, we will have some live streams coming up. So just take a look at the calendar and see when those are coming up. The home office deduction is one that I know a lot of people, in my experience, a lot of clients of mine actually have not calculated to be most beneficial for them, or even their previous tax professionals or CPAs have not. So definitely take a look at that, right? And so we're going to add all of these expenses up, and we get a nice even $2,000 in total expenses. So in this case, we had revenue for the quarter of $12,000. We had $2,000 in expenses, and we get a net income of $10,000. So step 2 is to multiply. So in this case, we're going to multiply by 6. You might be asking, why 6? Why not 4? Isn't this a quarter? But remember, this is just for Q2. It's not really a full quarter. It's not a full 3 months. It's just April 1st to May 31st. That's 2 months. And so think about 2 months times 6 gets us 12 months, which is the full year, right? So particularly for quarter 2, we're going to multiply by 6. If we were doing this for Q1, the IRS says that Q1 is January 1st through March 31st. That's actually 3 months, a full 3 months. So we'd multiply by 4. But in this case, we're doing April 1st through May 31st. So that's actually only 2 months. So we have to multiply by 6. So moving on here, step 3, calculate FICA tax. You might have heard of this before. FICA tax, payroll tax, Social Security and Medicare tax. These are not income taxes. These are just flat taxes that you have to pay in to fund the programs such as Social Security and Medicare. So the FICA tax rate is 7.65%. It's been that for a while. Multiply by 2, because again, when you're self-employed or the business owner or a freelancer, you're paying both for the employee side as well as the employer side, right? So when you're an employee, you only have to pay 7.65% because your employer also pays a matching 7.65%. But welcome to being a small business owner or freelancer or self-employed, you now have to pay both the employer side and the employee side because you're both the employer and the employee, right? There's no employee or no employer above you now, right, to be withholding this FICA tax and these estimated tax payments, right? So you have to multiply that by 2, and you get 15.3%. Now, a common error I see is people forget to actually apply a FICA percentage. So you're actually able to take only 92.35% of the FICA tax, right? If you notice, 100% minus 7.65 is 92.35. The IRS lets you deduct half of that. And so you actually only have to consider 92.35% of your net income when calculating the FICA tax. And so if you multiply 15.3% times 92.35% times $60,000, you get $8,478. So that's the amount of FICA tax that we're going to have to pay. You can see there, it's straight from the IRS website. If you just Google IRS topic number 751, if you see there towards the bottom, there is actually wage-based limits for the Social Security tax. So that caps out at $176,100. So if you make more than that, or if you're projected to make more than that in a year, just stop at the $176,100 and only calculate the Social Security portion, the 6.2% times 2 on that. The Medicare, the 1.45 times 2%, that is on everything. There's no cap for that. And then just also keep in mind that if you make over either $200,000 or $250,000, it depends on your income, on your filing status. But if you make over that, then you have to pay an additional 0.9% in additional Medicare tax. That is not multiplied by 2. That is just yours. It's just 0.9. It is not 1.8. It's just 0.9%. And so now we're going to go ahead and calculate our income tax. So again, that was FICA tax. Now we're going to be calculating income tax. And so to calculate income tax, you want to go ahead and get your net income there, multiply by the 6. We get $60,000 in annual income. Subtract your standard deduction. Again, this is one of the things that if you just take a flat rate, oh, okay, $60,000 and I'll multiply by 35%. Well, that doesn't consider your standard deduction. So if you are single and you're filing, you get a $15,000 standard deduction. If you're married filing jointly, that goes up to, that's effectively doubled, so you get $30,000, so just keep that in mind. And then the other thing is the FICA deduction. So you're actually able to deduct 1/2 of the total FICA tax burden. So if you remember, our total FICA tax burden was the $8,478. That's what we calculated in the last step. If you take 50% of that, you get $4,239. And so we go ahead and subtract both of those from the $60,000, and we end up getting total taxable income of $40,761. So we take our total taxable income and we apply our tax brackets. Now you might know, at least federally, the IRS has progressive tax brackets, right? It's a progressive tax system. So the more you make, the higher your tax bracket goes, right? And you can see there, you can Google on the IRS website, you have the tax brackets there. So right in the middle, you see the marginal rates. In this case, Sarah did not make enough to go too high in the tax bracket. So we only have to worry about those bottom 2 tax brackets, the 10% and the 12%. So it's 10% for incomes of $11,925 or less. So we're going to go ahead and take that from the $40,000 that Sarah made, and we get 10%. So we get $1,193. That's just times 10%. And then we have that second tax bracket, which goes from the next $48,475. And so we're going to go ahead and take that. Now, Sarah didn't make $48,475, right? So what we do is we just take that taxable income of $40,761 and we're subtracting $11,925, right? Because that fills up our first tax bracket there, our 10% bracket. We're just taking the remainder, which is $28,836, and we're multiplying that by 12%. That's the next tax bracket up. And for our next tax bracket, we get $3,460. And so we add up both of our tax brackets and we get a total of $4,653. Step 5 is pretty simple, just adding everything together. Add up the income tax, add up the FICA tax. We calculated those in 2 separate steps, and we get a total tax of $13,132. Now, here's another step that's missed often, especially if you're just taking a flat rate of, say, 30% and you're not really doing the full calculation. She also has 2 children. You notice that at the bottom there. So there's a child tax credit for $2,000 for each qualifying child that you have. And so in this case, Sarah's actually going to get a tax credit of $4,000. And so we can subtract that $4,000 from our total tax, and we get tax after credits of $9,132. So that $9,000 number, that's what we're going to be calculating total tax on. Imagine if we calculated it based off of the $13,000, right? Not considering the $4,000. That's a income base of $4,000 that we're going to be paying additional tax on. That's tax that we could be using or money that we could be using in our business to pay for employees, to pay ourselves, to pay for advertisements, to pay for new software or subscriptions, right? So again, overpaying, it's not the worst thing in the world, but in my opinion, it's definitely worth doing the math, and I'll even show you a calculator later that makes this process very quick, very simple. Now we're going to go ahead and do step 6 here. It's just dividing, so we're going to go ahead and divide by 4. I know before we multiplied by 6 because the quarter is only 2 months, but in this case the IRS rules state that the payment should be calculated on an annualized basis and then divided by 4. So that's what we're doing here. If you have variable or seasonal income or something like that, you can always do the annual installment method, which is a bit more forgiving around variable and fluctuating income. But in this case, we're going to go ahead and divide by 4 for every quarter. So with that, we calculated our estimated tax payment, $2,283, and we're going to go ahead and open up the calculator now so you can see how that works. All right, hello everybody. So now we've switched over to the calculator. So I'm just going to go ahead and enter this just like what we did. We're doing this for Q2. We have a quarterly revenue of $12,000, quarterly expenses of $2,000. We said we're filing single here, and then tax credits of $4,000. Just hit the calculated estimated tax button. You can see here it comes out to our same result, $2,283. You can go ahead and print this to PDF to have it as documentation. When you end up filing your taxes at the end of the year, you can forward this on to your CPA or your tax pro, or just honestly have it for your records, right? Part of being a small business is having good documentation. So go ahead, I always recommend save this down, print it to PDF, and just save it wherever you save your business records for your business, just so that way you have it. So I do want to point out just a few caveats with this calculator. The first caveat I'll say is that if you have other income, so if this is just like a side gig and you have a job that you're getting a W-2 for, this doesn't include the effect of that extra income and withholding. The other thing is that it doesn't include the effect of the QBI deduction. That's actually changing this year in the latest tax bill to go from 20 to 23%. I didn't include in this calculator because it does depend on your exact business and what industry you're in. So here we are on IRS.gov/payments. If you type in IRS.gov/pay, it automatically forwards to /payments. And from here, we're going to go ahead and we're going to direct pay with a bank account. That's the free option. If you want to go ahead and pay by debit card, credit card, or digital wallet, you can. There is just a little bit of a fee to cover the credit card processing fees on top of that. So I usually like to go ahead and pay with a bank account. It's like a direct debit. That way it's free. It's 0% fee, and you're not paying a fee. So I'm going to go ahead and hit pay individual tax. Remember, if you're a small business and you're either a sole proprietor, an S Corp, or a partnership, there's no real such thing. Sometimes in fringe cases there is, but for the most part, there's no business tax, right? Everything flows through to your personal tax return. So you're going to go ahead and pay, even though this is really an estimated tax payment due to your business income, you're going to go ahead and select the pay individual tax. From here, go ahead and select make a payment. And it brings us to our direct pay sort of portal here. So reason for payment is estimated tax. We're going to go ahead and apply payment to the 1040 ES. And then tax period for payment is 2025. Go ahead and select continue. It's going to ask you to please confirm. And now this step, it looks like a lot. It's really not. It's just to verify your identity, right? So they want to make sure that they're applying the tax payment to the correct person. So go ahead and get out a prior year tax return. You can use, it looks like they don't have 2024 up yet as of today. So you can go ahead and select 2023, 2022, 2021, 2020, 2019. If you're doing this in the future, they may also have 2024 up as an option that you can select to use. So I'm going to go ahead and get out my 2023 tax return and now enter the information exactly how it appears on your tax return. So after you hit continue and your information is verified, you'll get to the payment information and bank account information sections. So the first thing is how much you want to pay. So we're going to go ahead and enter in our estimated payment from our example. We're going to go ahead and select a payment date. Technically, if we're doing this for Q2, it's due on June 15th. As you can see here, June 15th is actually a Sunday. And so technically, if it falls on a weekend or holiday, the due date, you can go ahead and select the next day. So we could pay this on the 16th. I'm going to go ahead and select the 13th because I just like having a little bit of buffer room there, just in case, I don't know, something happens. I just like to have a little bit of buffer there, and it's only 3 days, right? So I'm going to go ahead and select the 13th. And now I'm going to go ahead, I'm going to enter my routing number, account number, and confirm the account number, select the account type, and then I'm going to go ahead and hit the continue. You can enter your email here if you want. It's optional. So I'm going to go ahead and enter that and hit the continue button to show you what the next screen looks like. And finally, we're pretty much done here. You're just going to go ahead and enter your electronic signature. Go ahead and accept the debit authorization agreement, hit submit, and you're done.